Good morning, everybody. It's Wednesday, February 12th, 5:26 a.m. Central Time. Grain markets are mixed this morning. March corn futures up 3/4 cent at 484 3/4. March soybeans down 4 3/4 at 1038 3/4. March Chicago wheat up 4 1/4 at 581 1/4. March Kansas City wheat up 3 3/4 at 596 1/2. March spring wheat up 4 1/2 at 622 3/4. We had a USDA report yesterday, and USDA will absolutely be accused of some manipulation following the numbers. Let's start off with the U.S. stuff.
So the agency left its U.S. corn and soybean balance sheets unchanged yesterday. The markets moved lower following the report, as many traders had expected increased demand estimates for corn in particular. Only minor changes were made to the U.S. wheat balance sheet. Demand was increased by 4 million bushels.
Here's what happened yesterday. The corn market was higher ahead of the report because I believe traders had expected a friendly number on this U.S. balance sheet. I think the trade expected USDA to come up with the export number in particular. And if that would have happened, you could have seen this corn carryout projection drop below 1.5 billion. And they decided to leave it unchanged. I still think at some point in time, USDA will have to come up with its export projection and maybe cut this carryout number. They just didn't do it yesterday. So the lack of friendly news on the U.S. side, I think, was partially responsible for the selling pressure. Again, it wasn't because the report was bearish that we backed off. It was just because the bulls and the buyers didn't get what they were looking for. On the soybean side, I wasn't looking for much of a change, and we didn't see any change at all. To look at U.S. ending stocks to use ratio statistics, this is unchanged versus last month. The ending stocks to use ratio projection, 10.2%. That means we're going to have 10 bushels of corn left over at the end of the marketing year for every 100 bushels that we've used. And 10.2% stocks to use is not super bearish by any means. It's much lower than what we saw during the bear markets of 2014 through 2019. Remember, when this number's high, to put it very simply, when stocks to use is high, that's bearish. When it's low, that's bullish. We're a little bit closer to where we were during the bull markets of 21 and 22. You know what? If USDA does decide to increase that export projection, which I think is warranted, you could be sub 10% and back into a situation that probably warrants spot corn north of $5, to be honest. I know there's a lot of other factors, specifically the soybean market, which is not acting well The supply and demand situation is negative in soybeans. Let's put it that way. It's going to result in some big corn acreage, which is kind of a weight here. U.S. soybean situation, ending stocks to use ratio projected at 8.7%, which is not super high, but it's the highest since the 1920 marketing year. The global stuff in soybeans is really the big anchor. Let's go to South America and talk about the world stuff.
USDA reduced its estimate of Argentina's corn and soybean crops. The nation's corn crop is projected at 50 million metric tons compared to the January forecast of 51. The soybean crop is estimated at 49 million metric tons, down from 52. The reduction was attributed to hot and dry weather conditions. Argentina's crops recently received rainfall, but it was scattered, and the hot and dry weather has already caused damage. The USDA also lowered its estimate for Brazil's corn crop to 126 million metric tons, down from 127.
Okay, this is where the USDA World Board will be accused of some balance sheet fudging or manipulation. USDA cut Argentina's corn production estimate by 1 million metric tons. They also cut beginning stocks by 1 million metric tons. So what did they do? They cut domestic corn usage in Argentina by 2 million metric tons, leaving the Argentina carryout projection totally unchanged. Now, I don't have any great insight into domestic corn usage in Argentina, but USDA essentially, it looks pretty obvious to me that they balanced the balance sheet here. I don't know if just in one report you can justify a 2 million metric ton cut to domestic corn usage. Maybe you can. I don't know. It just looks kind of like they were trying to keep this thing kind of even. They did something similar for Brazil. The corn production estimate was cut by 1 million, but then they just went ahead and cut the country's export estimate by 1 million, leaving Brazil corn ending stocks unchanged. So you could have seen this number, this 290.3, you could have seen that lower by 2 or 3 million metric tons if they chose to leave those demand categories unchanged. It's just kind of interesting how they did it. You can tell that they're trying to balance the balance sheet, I think is probably the way that I would put it. USDA cut its China corn import forecast, and they also cut the China wheat import forecast. This chart right here is not super inspiring if you're a grain bull. I mean, you've got one of the world's biggest importers with a drastically reduced import program. China was actually the reason for the cut in corn ending stocks. So we went for the world, we went from 293.3 down to 290.3. And that 3 million metric tons was exclusively a result of what happened in China. They cut the import forecast by 3 million, and then they just cut the carryout estimate for China by that same amount. So the world corn situation, I think, first of all, it's projected to be the tightest since the 13-14 marketing year, 23.6%. But if USDA is wrong about these demand revisions, these downward demand revisions in Brazil and Argentina, this number could be even tighter. So I don't think there's anything bearish about the world corn situation. The world soybean situation has tightened up a little bit. This ending stocks to use ratio projection of 30.6%. That number was north of 32 or even 33% a few months ago. So it's come down a little bit because of these production cuts, because of a tighter situation in the United States. It's not bullish by any means, but it's not nearly as bearish as it had been.
So if you guys have not checked out our premium content, you sure need to do so. Joe, can you tell me about yesterday's premium video?
Report day is a good day to be a premium subscriber. I blast out a quick, like 2 to 3 minute video within 10 minutes of the report, and I explain the high level items. Like, this is what you need to know about the report right now. And then we do a follow up. We have the next morning, which is today, all of the ending stocks to use ratio charts for corn, soybeans, and wheat, domestic and world. I do kind of a deeper dive analysis in the email. Today, I'm going to do charts with Brian Split. There's a lot going on the technical front, and Brian is great at explaining it. If you guys want to see the premium stuff, go to standardgrain.com. You can sign up this morning. It's a $50 per month subscription. Cancel at any time, no other fee, no other obligation. It takes like 30 seconds to sign up on your phone. We do Google Pay, Cash App, credit card, Apple Pay. Piece of cake, guys. Check that deal out this morning.
Rainfall in Argentina on Tuesday provided beneficial moisture to the nation's corn and soybean crops. The precipitation arrived at a crucial time as some of the country's key farmland experienced temperatures of around 104 degrees Fahrenheit on Monday. More rainfall is expected towards the end of this week. Last week, the Rosario Grains Exchange lowered its estimate of early planted soybeans in fair or poor condition from 50% to 30%. The Buenos Aires Grains Exchange is estimating this season's soybean crop at 49.6 million metric tons and the corn crop at 49 million metric tons.
Let's start from the beginning. Here's a very good map from our friends at Crop Profit. Past precipitation data out of South America is very difficult to find, and they've got some excellent stuff. So most of Argentina, corn and soybean country, has seen half to 3/4 of its normal rainfall, and in some areas less than that over the last 30 days. The rains that hit earlier this week hit your central, to call it west central, corn and soybean areas. Definitely helpful. Some areas missed out. Those southern areas in Buenos Aires, they caught the rains last week. The forecast is improved, and your central and northern areas should see quite a bit of rain over the next 10 days. I think USDA was justified to make their downward revisions to the crop estimates, but they may not have to go down a whole lot further if these rains continue and you see kind of a wetter pattern emerge here.
Mexico plans to engage in discussions with the U.S. regarding President Trump's proposed steel and aluminum tariffs. On Monday, Trump announced a 25% tariff on all steel and aluminum imports set to take effect on March 12th. Mexico has criticized the measure as unjustified. According to the country's economy minister, Mexico imports more steel and aluminum from the U.S. than it exports there, with the U.S. serving as the primary market for Mexican steel products. Additionally, some steel products cross the U.S.-Mexico border up to 8 times, making tariffs harmful to both economies.
Mexico, of course, has been and will be the largest buyer of U.S. corn on the export market. As long as they just leave the word corn out of their tariff vocabulary, I think we're doing just fine. So nothing to see here, but we've got to keep an eye on what Mexico says, because you get the wrong headline out of Mexico, it could be very bad for the corn market.
It appears that the Federal Reserve is in no hurry to cut interest rates. Fed Chair Jerome Powell stated on Tuesday that because the economy is strong and inflation still needs to cool, there's no need to rush lowering rates. Powell stated that the labor market is stable and not contributing to inflation. At the end of 2024, the Fed's preferred inflation measure, the Personal Consumption Expenditures Price Index, stood at 2.6%, well above the Fed's 2% target. There are concerns that President Trump's policies, including tariffs and an immigration crackdown, could cause a resurgence of inflation. The market is pricing in only 2 rate cuts this year.
Monthly CPI data will be released later this morning. Ahead of that report, the trade expects headline consumer inflation at 2.9%. That's percent annualized change. That would be the same as last month. The most recent PPI print, which is wholesale inflation, was 3.3%. Their stated goal is 2%, and they're not anywhere close to it. And the inflation numbers have kind of stagnated. Some people believe that the Fed has secretly kind of raised its inflation target to something in the 2.5 to 2.7% range. But in any case, they're not going to cut this month, and they're going to wait and see how these numbers play out. Your Fed fund rate should remain unchanged at an effective 4.375%. What did cattle do yesterday?
Cattle futures had another rough day. Live cattle were 92 cents to 220 lower. Feeders were 257 to 335 lower. Box beef was also lower yesterday. Choice was down 104 at 322.46. Select was down 171 at 312.21.
A little bit of movement in the outside markets this morning. U.S. dollars about flat. Stocks are off fractionally. Bonds about flat. Gold's down $22, and crude oil is down 86 cents in the March WTI at 72.46. Have a great day, guys. We'll be back on Thursday.